Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, in part one of a three-part series, Paul speaks with Ken Esch, partner of PwC's Private Company Services, about the encouraging results of their third quarter Trendsetter survey of private middle market companies.
Okay, so here we go again. The pretty good report this quarter. Golly.
Yeah. Very so.
Things seem to be really moving in the right direction. I mean, I guess first of all, the optimism in the U.S. economy is pretty remarkable.
Yeah, it's solidly above that 60% range, which we've seen for a number of the quarters coming out of the recession here, but. With respect to the U.S. economy, the participants in the PwC survey just feel like we're on very solid footing, and very few, less than 10%, have any kind of pessimistic view, out there. So, they're very, very bullish on the U.S. economy. Doesn't necessarily translate to that international or the world economy, where there's a lot less optimism, just less than 40%, out there. But it's really not dissuading the companies from continuing to expand, for the long term, in the international markets. They do see higher growth rates, there, and they do plan to continue their investment, in the foreign markets.
Now, in terms of the foreign markets, I mean, obviously, it's a mixed bag. Although I guess it depends on how you look at it, but it's a mixed bag in terms of the regions that we typically talk about. I mean, China seems to be going through a little bit of a rough spot here. Everyone's downgrading their expectations for China. Brazil is as ever the perpetual country of the future. I've always loved that phrase. I mean, obviously, India is there just seems to be kind of a real mixed bag internationally. And I guess then, from what I can infer from the fact that people are still planning to invest, reasonably heavily in those countries, I'm guessing that the sentiment is that these things are just temporary blips and things will get going. Is that a fair reading or no?
No, I think that's a fair reading. There's no doubt that many of these international markets are facing headwinds, in their economies. If not just falling into recession, or bouncing right along near recession. Europe, still seems to be a very slow growth economy. Word from Japan, is negative, following into recession here and looking at more remedial measures to try to prop up their economy. China clearly, slowing. We're not certain exactly, where those growth rates, are going to fall, but it's widely viewed by the Trendsetter participants that it's a slowing economy. But at the same time, there's no doubt that the demographics, are changing. That the population and the economic power is shifting, towards the east, from the west, and towards the south, from the north. And we think that that's a long-term trend that's here to stay. And many of the participants, these private companies in the Trendsetter report, are not managing to a quarter, or the next 6 months like many of their public company counterparts. They're able, to invest for the long term, and they do feel that the growth rates, in some of these developing or emerging markets, these growing economies, are going to be better, than the U.S. And they just need to be there, to fuel their growth.
Now, do you think? I mean, again, I know the survey focuses on private companies. Do you think, in terms of companies with similar size, do you think that public companies of similar size to the companies that you talk to, the private companies, do you think the public companies are at something of a disadvantage? Because you made the point they don't manage to earnings to quarter, right? And for these kind of things, you're right. There's a gestation period, I guess, in some respect, that you have to have patience to get through. I mean, do you think that puts the public firms at a little bit of a disadvantage?
Yeah, I think that it does, but we don't study, the public firms.
Yeah.
We focus just on the private company side, and routinely, what we hear from private companies is that they feel like they're in a competitive advantage because they don't have to answer to a shareholder on a quarterly basis, and that they can plan for long term. That means that they can be a little bit more measured, in their approach into these foreign jurisdictions. They can build their business in these economies over time. Many of them are doing that by opening a sales office, for example, fine-tuning their products and services to meet the needs of the customer in that foreign jurisdiction. And over time, may result in additional investments there in property, plant, and equipment, for a product company. Or it could even result in some sort of joint venture, with a local partner, in that market to help them reach, more customers.
Be sure to check back for part 2 of this 3-part series. Thanks for listening.